Hi everyone, I am just a pretend cat from Quantum Cats. Today, let's walk through Netflix's latest earnings report. And it was a solid one. Let's quickly go over the key numbers and then take a look at what happened to Netflix stock, particularly the 30-day trend after past earnings, which might surprise you. This quarter's revenue came in at $11.08 billion, beating Wall Street expectations. That's up 15.9% year-over-year. The quarter-over-quarter increased 5.1%. EPS came in at $7.19, also ahead of expectations, with 47.3% year-over-year growth and 8.8% quarter-over-quarter growth. Another key metric, operating margin surged to 34.1%, up from 23.8% a year ago, a big jump in profit efficiency. So, let's summarize. Looking at Wall Street expectations, revenue growth, earnings growth, and margin improvement, Netflix really checked all the boxes. But the stock dropped over 5% the next day. What gives? Let's dig into some historical context. How does Netflix stock usually perform after earnings? Spoiler alert, it gets wild. Let's first look at over 7 days. This is the most volatile window. Emotions take the wheel. Take 2023 Q2, stock dropped 11.5% in the first week, but by Q3 2023, it jumped 18% post-earnings. This is classic react first, think later behavior from the market. Now, let's look into 30 days, where it gets more interesting. In 2023 Q2, the stock fell 15.3% over 30 days. But in 2023 Q3, up 34.6%. This shows strong earnings don't just make a splash, they can start a real rally. By 90 days out, the market tends to get past the noise and starts pricing in strategy. In Q1 and Q3 of 2023, we saw sustained moves of 30 to 40%. At this point, we are not just dealing with hype, we are seeing capital vote on the company's future. To help you visualize this, here's a heat map that compares post-earnings price change with the broader market and QQ. You'll notice that aside from 2023 Q2, Netflix stock tends to trend up after earnings. So what happened in 2023 Q2? That earnings report came out in July, and the next 90 days included macro headwinds, tech pullbacks, and general investor anxiety. Even though we can now say it was probably a buying opportunity in hindsight, the mood was cautious, and Netflix was caught in it. Now let's look at what Netflix is saying beyond the numbers. They've stopped reporting subscriber counts, and that's a pretty big shift. Why? Because subscriber growth is slowing, and they know it. I don't hold a Netflix position, not because I believe it's a poor company. In fact, I think it's excellent. However, I perceive limited growth potential, and there are many other appealing stocks available, which I'll discuss further in other videos. Instead of focusing on a number that's plateauing, Netflix is shifting the narrative toward metrics that better reflect future monetization. Things like engagement, total hours watched, revenue per user, operating margin, free cash flow, and especially the ad-supported user base. Here's what matters. Even if subscriber growth slows, earnings don't have to. Netflix now has over 94 million users on its ad-supported tier, and it plans to double ads revenue by 2025. You might ask, won't ads hurt the experience? Well, they're getting clever, introducing pause screen ads and interactive formats that feel more like content. Advertisers love it. Users don't seem to mind. Netflix is also transforming itself. Not just a binge platform, but an event platform. They're getting into live sports, like securing NFL Christmas games and signing boxing events. That means we won't just watch Netflix alone at night. We might join millions watching something together. This is a big bet on FOMO, driven content, and building real-time buzz, a competitive edge in the streaming wars. Netflix is redesigning its homepage with AI-powered recommendations, not just based on what you watched, but predicting what you'll want next. What does that bring? More time watched, higher retention, more valuable ads impressions. It's not just a UX upgrade, it's a monetization machine. Netflix isn't just a subscription service anymore. It's becoming a multi-engine ecosystem powered by ads, smart content strategy, and increasingly AI. Subscriber growth may be slowing, but revenue per user is climbing fast. So what do you think of this earnings report? Will ads really work? Are you excited about AI-powered Netflix? Let me know in the comments. And I'll see you after Google and Tesla earnings this week. I'm Quantum Cats. Thanks for watching.